makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Cernobbio on the shores of Lake Como in Italy with conversations that matter. Here's what's coming up on today's program. China ramps up efforts to stimulate its economy with the central bank trimming the amount of foreign currency deposits that banks are required to hold. Now, sentiment also gets a boost as a Chinese manufacturing gauge unexpectedly shows growth. European stocks, U.S. futures gain as traders, of course, await today's U.S. jobs report for clues on the Fed's next steps, with the data forecast to show the labor market cooled in August. Plus, former U.S. House Speaker Nancy Pelosi tells me the U.S. and China must learn how to work together despite a lack of shared values.
We don't have shared values, but we have a shared planet, and we have to work with the Chinese to save the planet.
Over the next hour, we'll of course be joined by some of the biggest names in economics right here at the Ambrosetti Forum in Cernobbio. First up, we'll speak to the French Secretary of State and former OECD chief economist Laurence Boone. Then at 9:30, we'll also be joined by Nobel Prize-winning economist Joseph Stiglitz. Then we'll also speak to another very famous economist and market-moving spokesperson at times, Nouriel Roubini. But first, let's take a look at the European markets. And for the moment, we're seeing gains across the board. Now, they're shy gains, but they're gains nonetheless. Stocks remaining higher. Again, everything depends on what we get from that key U.S. jobs data a little bit later on. And then we've had some encouraging news after the volatility of last week when it comes to what China's been doing. A bit of support there from China Day that was a bit better than expected. Again, today's payrolls numbers from the U.S. may provide further evidence of slight cooling in the still tight U.S. labor market. We're also getting manufacturing PMI for the euro area. That's for the month of August. 43.5. The preliminary reading was 43.7. This is not a great number because anything below 50, of course, indicates a contraction. Now, the former U.S. House Speaker, Nancy Pelosi, says the U.S. and Chinese leaders must learn to work together despite a lack of shared values. Now, in a wide-ranging interview, she also told us how Russia's invasion of Ukraine is, of course, a threat to democracy.
On security, what is happening in Ukraine is a challenge to democracy, not just there, not just in the EU, NATO countries, but really to the world. And what a tribute to democracy that the courage of the Ukrainian people are. What's frightening is that Putin does not share any values of democracy, of justice, of respect for the lives of people, concern for children or anything. He's frightening, but it's doubly frightening as a person like the former president who thinks that's okay. Well, isn't that sad? But it's so sad and it's so extreme that it's everything to me is not frightening, but an opportunity.
An opportunity, but when you look at China, for example, if you look at what the U.S. has been doing with China and how they should treat China going forward.
Well, China's a big country, and so are we, and we have to find an accommodation on how we treat each other. But in terms of the three things I named, security, China has been a violator of transferring technology of weapons of mass destruction to rogue countries, A. B, in terms of economics, they've been violated almost every trade standard of access, of piracy, of obeying WTA rules and the rest. And in terms of governance, what need I tell you, Hong Kong, Tibet, Uyghurs, threat to Taiwan, and the rest. So we don't have shared values, but we have a shared planet, and we have to work with the Chinese to save the planet, because they're now, I think, the biggest emitter. If not us, they're second. And they're part of the solution in all this.
Well, former House Speaker Nancy Pelosi also gave us her views on her political nemesis, Donald Trump, as he battles multiple legal challenges in his bid to regain the White House.
People are afraid of him now because, as you see his desperation, in other words, it's one thing to say we have a disagreement on policy, okay, and we do. We have another thing to say that truth is not prevailing. But it's another thing to say there's a recognition of all the violations of the rule of law, that any person is above the law, undermining the press, which is the freedom of the press is the guardian of the gate of freedom. So he was clever. Undermine the press, undermine the rule of law. I'm above the law. So seeing the length to which he will go, of course, is more frightening. He's a threat to our democracy, but we intend to win.
He's so popular with the voters.
Well, he's popular among his group.
Are you surprised at how popular he is with?
Well, I'm never surprised. It's not a word I use. I just don't use right. It's interesting to see how there's a certain element of the population who will just go for him. They're people we would probably never get. They don't share our values in terms of respect for the dignity and worth of every person and the rest. But there are some who are supporting him who are just afraid. They don't see a place for their families in the future. They're concerned about globalization. They're concerned about immigration. They're concerned about innovation. They're concerned about diversity, women, minorities, LGBTQ, other people coming into the leadership arena, and and that's to be respected. So I respect all of the people of America, and when people ask me, are you afraid of what might happen? I say no, because of the goodness of the American people, the strength of our democracy, we will prevail. And my motto is, the flag is still there, as we say in our national anthem.
Is there a Republican president, a candidate that you could live with?
I'm not into Republicans, I'm into the Democrats, and hopefully the Republican Party can find a candidate that America can live with. I say to the Republicans all the time, take back your party. The Republican Party is a great party. You've done great things for our country. You're not a cult to a thug. You're a great, grand old party. And recapture that, because America needs a strong Republican Party. A strong Democratic Party too, but a strong Republican Party. So hopefully, as soon as we get through this, shall we say, cancerous situation that we're in, the malignancy of Trump, they will emerge in a strong way with the leadership that I know is there in the Republican Party. Not necessarily in the Congress, but in the country.
When you look at geopolitics, what scares you the most?
What scares me about what?
When you look at foreign affairs, geopolitics.
Oh, in foreign affairs. Well, in foreign affairs, anytime any of us travels abroad or receives dignitaries from overseas or grassroots activists, whoever it is, there are three things. One is security. Security, 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 so important. Security. Secondly is economics. How do we relate economically? Because that's the strength of all of our countries, to do so in a shared manner. And governance. Governance. What is the strength of the democracy in your country? How do you treat people and respect them? What is the integrity of your economic system? So those are the how we relate as Americans going abroad. On security, what is happening in Ukraine is a challenge to democracy, not just there, not just in the EU, NATO countries, but really to the world. And what a tribute to democracy that the courage of the Ukrainian people are. What's frightening is that Putin does not share any values of democracy, of justice, of respect for the lives of people, concern for children or anything. And he's frightening, but it's doubly frightening is a person like the former president who thinks that's okay. Well, isn't that sad? But it's so sad, and it's so extreme that it's everything to me is not frightening, but an opportunity.
An opportunity, but when you look at China, for example, if you look at what the U.S. has been doing with China and how they should treat China going forward.
Well, China's a big country, and so are we, and we have to find an accommodation on how we treat each other. But in terms of the three things I named, security, China has been a violator of transferring technology of weapons of mass destruction to rogue countries, A. B, in terms of economics, they've been violated almost every trade standard of access, of piracy, obeying WTA rules and the rest. And in terms of governance, what need I tell you, Hong Kong, Tibet, Uyghurs, threat to Taiwan, and the rest. So we don't have shared values, but we have a shared planet,
right.
And we have to work with the Chinese to save the planet, because they're now, I think, the biggest emitter. If not us, they're second, and they're part of the solution in all this.
That was former U.S. House Speaker Nancy Pelosi. Now, coming up, we'll have plenty more from Chernobyl as European policymakers contend with rising fears of stagflation. We'll be speaking to Laurence Boone, French Secretary of State for European Affairs. She joins us live here from the Ambrosetti Forum in Chernobyl, close to Como. This is Bloomberg. So European policymakers increasingly being confronted, of course, by the dreaded reality of stagnating economies while inflation remains untamed. Now, speaking this morning, Bank of France Governor François Villeroy de Galhau says the ECB's options for its next meeting remain open, but the end of the rate hiking cycle is near. I'm very pleased now to be joined by Laurence Boone, French Secretary of State for European Affairs. She truly understands the economies like few people do in politics, because before she was also chief economist at the OECD. So Laurence, thank you so much, as always, for joining us. When you see the complexity of countries in Europe at the moment to deal with stagflation, to deal with all of these unknowns, what worries you the most?
So first, thanks for the invitation. It's a pleasure to see you, Francine. I think quite a few people do not value highly enough how we've gone through the crisis since Russia's invasion in Ukraine. We have been having growth, we have been securing energy, and at the end of the day, inflation starts to recede, as you were just mentioning. We expect French growth to be around 1%. And we will be reforming the electricity market to ensure that prices remain competitive for a long-lasting period. So overall, we've gone through this crisis with flying colors.
Are you surprised that we have done that? And is there a danger that actually it will come back to bite us a little bit later? So that, not we're complacent, but we think everything's okay, and then you're going to see companies really starting to hurt with refinancing costs.
So it is true that there is a cost. I think we've done really well. We've been acting swiftly to protect firms and consumers in the short term and to prepare the medium term as well. But it is true that it remains a difficult period with the uncertainty coming from the war, coming from China. And we have to be extremely careful and as reactive as we've been throughout last winter.
Do you worry about stagflation taking hold in Europe?
I'm quite optimistic, cautiously optimistic, because most of inflation, as you know, is coming from energy and has been spilling over in food as well. But we have been taking measures to address inflation. In the short term, most countries in Europe have put in place shelters against energy prices, and obviously that means that inflation recedes more slowly, but it is receding. And we have also been taking a lot of measures to boost investment and growth. The last step we have to do is to improve our budgetary policy, and I think that will be essential to address these headwinds.
I mean, overall, how do you think the relationship at the moment is between citizens and Europe? You're seeing, pockets of concerns here and there, either populist movements or noises about the cost of living, being blamed on Europe.
So one of the consequences of Russia's aggression against Ukraine has been high energy prices, and Vladimir Putin is weaponizing energy prices. We have to be aware of this, which is why it is super important to make sure that we can provide shields to consumers and to firms to maintain competitiveness and good jobs, and consumers so that their purchasing power remains as good as possible. I think we've done well so far, but we must be very vigilant precisely to avoid this rise in populism and to preserve the resilience of people.
But how do you match that with some of the budget? I mean, there's always a problem of finding the money.
This is obviously, there are two things. One is in the shorter term, We are reforming the budget rule, the fiscal rules in Europe, and I think that is important. We cannot keep with the pre-COVID, pre-war rules. We have to have rules that allow for growth, investment, and sustainable finances. And I think looking ahead into the medium term, we will have to move away from fiscal rules that are solely dedicated to preserve the euro to a true budgetary framework that will enable investment and raise potential growth in the energy transition period.
What worries you the most about the French economy right now? I know there's been a lot of, also images that were quite shocking on TV with burning Paris and riots.
So I think there's been riots all across Europe and even the world. You've seen them in the US, we've seen them in the UK, in Sweden, in Denmark. When these riots happened, I called my colleagues in the UK, Denmark and Sweden. We've done the same type of measures for the short term to repair as much as possible, as quickly as possible, and for the medium term to look at family and kids. What worries me is we need Ukraine to win Russia's war. I think that is the most important. It's about the geopolitical stability of the continent, because we've seen Russia before in Georgia, in Crimea. They cannot win this time. That is the security of the EU which is at stake, and that is where we have to focus most of our efforts.
How much more can Europe do on that front? I mean, many weapons have been sent, much support has been given.
So there's the training of soldiers as well. Then there will be the discussion about, gradually joining the EU as they are doing reforms and progress. We will continue to supply weapons, and then we are building our own security, right? No one was talking about a European defense only 2 years ago, and now we're putting the seeds of that with a lot of investment in the industry, in defense industry.
So some people think that actually Vladimir Putin is trying to buy time in case President Trump, gets elected, and therefore it would change what's happening in Ukraine. How can Europe prepare for a potential eventuality like that?
But that's exactly the point when we discuss European sovereignty. It's about having competitive energy prices, a huge industry, and defense capacity within NATO, as an ally to NATO. But to be strong in our fit, 440 million consumers in Europe, 25,000 euro of GDP per head. We are the first economy in the world.
Laurence Boone, as always, thank you so much for joining us. That was the Secretary of State for Europe for France. We'll have plenty more, of course, from Ambrosetti here in Chernobyl throughout the day. We'll speak to economists Nouriel Roubini, but also Joseph Stiglitz. This is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in Chernobyl, Italy today. Now let's get the latest from Gabon, where a transitional leader is set to be sworn in on Monday. Now this, of course, is after the military seized power from President Ali Bongo in a coup earlier this week. For more on all of this and the fallout, we're joined by our Africa correspondent, Jennifer Zabazaja. Jen, so what exactly is the latest on the situation, and what do we know about Gabon's new leader?
Yeah, Fran, this is still very early days, as you know, but what we have heard, we've heard from this new military leader. His name is General Nguma, and he's actually a distant cousin of the President Ali Bongo, who, of course, as you mentioned, was ousted. He also was serving as a military chief under Bongo's father, who was in rule for 41 years. So he is familiar to this country and especially to the administration. And what we heard actually this week, which was a bit surprising, was that the military leaders were trying to justify this takeover. What they were saying is that, not only was it the fact that they think the election that they had last week was rigged and was flawed, but they were also citing concerns around the president's health. And what we know about that, the president back about 5 years ago had suffered a stroke. And so a lot of the opposition leading up to this election was concerned about whether or not he was fit to serve. And so what we heard from the general on Thursday in a French in a French newspaper was that he said the Constitution was violated, the method of the election itself was not good, and so the army decided to turn the page. And so now really what we are waiting to see is how the international community is going to respond. We've heard from the U.S., we've heard from the EU, all condemning this coup, this attempted coup takeover. But now the question is whether or not we're actually going to be sanctions imposed, especially because the military leaders are trying to instill some sort of normalcy into what this takeover has played out to be over the past few days.
Jen, thank you so much. Our Bloomberg Africa correspondent Jennifer Zabazaja. Now we'll have plenty more from Chernobyl here on the shores of Como. Coming up, we discuss China's economic troubles and the global impact with world-renowned economist Joseph Stiglitz. Don't miss that interview, that conversation, next right here from Chernobyl, Italy. This is Bloomberg. Well, China ramps up efforts to stimulate the economy, with the central bank trimming the amount of foreign currency deposits that actually banks are required to hold. Sentiment also gets a boost as the Chinese manufacturing gauge unexpectedly shows growth. European stocks and U.S. futures gain as traders await today's U.S. jobs report for clues on the Fed's next steps, with the data forecast to show the labor market cooling a little bit in August. Plus, former U.S. House Speaker Nancy Pelosi tells me the U.S. and China must learn how to work together despite a lack of shared values. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Chernobyl, Italy, for the Ambrosetti Forum. So China has ramped up efforts to stimulate the economy and support the yuan. It's cut the amount of foreign currency deposit that banks are required to hold on reserve. Beijing has also announced fresh stimulus for the beleaguered property sector and unveiled plans to expand tax breaks. It's the latest in a long line of moves to shore up confidence in the world's second largest economy. Now, to discuss this and much more, I'm very pleased to be joined by Nobel Prize-winning economist Joseph Stiglitz. Thank you so much for joining us.
Nice to be
Professor,
here.
there's so much to talk about China, but actually they've put measures and it's unclear whether they will work. Are they targeting the wrong things, or is it just a structural problem that they need to address first?
I think there is a structural problem that they need to address. China has sometimes been analogized to riding a bicycle. If you're going at 7%, everything is going well. Very hard to ride a bicycle at a very slow speed. And for 40 years, the mentality has been a high-speed system. So when you have a high-speed system, you build property well in advance of what you need. You make mistakes. 6 months later, a year later, those mistakes are corrected because there's so much demand. Now they have to do a better job of fine-tuning.
Yeah.
And I think their system is not well adapted to doing that, particularly under President Xi, who has dismissed a large fraction of his economic experts.
But Professor, so is this first of all a political decision, right? So he wanted to consolidate power, and he could only do that possibly if the economy was strong. So does he change now that he has more control, or do you think he's weakened because of a weaker economy?
I think he's surely weakened, but that doesn't say how he will respond.
Right.
When you feel things are not going your way, you may respond in a more, quote, stronger way that may actually be adverse to the real performance of the economy. Steering an economy of the size of China is not easy. China, in what we call PPP, purchasing power parity, a way of trying to equivalize different economies, is larger than the United States. No one would even conceive of trying to steer this monster. But China, President Xi thinks he can do that kind of steering. And, I'm suspect.
Yeah, but by saying you're suspect, then are you expecting a lot of, concern, a lot of volatility with China? And what does that mean for the rest of the world?
Well, I'm expecting, and I have been expecting exactly what we've been seeing, that they tried.
You called it, yes.
They tried this, it doesn't work.
Yeah.
They do a little bit too much of that, and then they get worried, and then they go back to this. They shut down part of the tech sector. There's it's not just what we're talking about here. It's not just the property sector, which is a very large part of the economy, but it's many other sectors of the economy.
But Professor, is the only way then to slow the economy, right, to be able to readjust? And what are the impacts for the U.S., the Fed, and Europe?
Well, I think we have to remember that in the 2008 economic downturn, China was the source of engine for the global recovery. It was pivotal. It won't be there. And in fact, I worry it will be dragging down the global economy. And that's one of the reasons that I'm so concerned about what has been going on in monetary authorities, particularly in the United States, that they've pretended that nothing's going on in the rest of the world. They've been raising interest rates well beyond anything that is reasonable, and have put at peril, particularly, I think, the European economy. I think America is going to do okay, but I worry about Europe.
But with all due respect, the Fed has two mandates, jobs and inflation. Jobs are okay, and they need to handle inflation.
The source of the inflation in the United States, going back to the pandemic, were a series of supply side interruptions, major demand shifts. When I say demand shifts, people were demanding, for instance, housing in different places. The aggregate demand was not that high. The aggregate demand for housing, for instance, we killed off more than 1 million people. That should lower the aggregate demand, but they wanted houses where they weren't, where it's in the supply. You don't solve that problem by raising interest rates. That reduces the supply to meet the demand. So the Fed, from the very beginning, had a misconception of that this was an ordinary inflation, excess demand, and responded wrongly. The result of that is our inflation has come down, but it has nothing to do with the Fed. It has basically because we resolved the supply side problem.
So if you're telling me, Professor, that you think that the Fed has hiked interest rates too much, I think you use the words, beyond what is reasonable. Will it crush the economy further down the line?
It's clearly going to weaken the economy down the line. How much we don't know, because as we always say, there are long and variable lags. In the United States, we're lucky that fiscal policy has been very good. And we've had a couple surprises on the positive side. The IRA, the bill to support green investment, has proven to be far more effective than anybody anticipated. They thought, the CBO thought it was going to be a $271 billion over 10 years, big. Turned out current estimates are over $1 trillion. So we are lucky that Joe Biden got things right. The Fed got things wrong, but the two are going to balance out. But for Europe, things look very different because you don't have that strong fiscal policy, and so I do worry.
So do you worry? Do you think the ECB made policy mistakes?
I think that they were in a corner. If you don't match the United States, the exchange rate weakens, that exacerbates the inflationary pressures. There are always strong forces to sort of keep your interest rates in line. But I think judging where I see the differences in circumstances, it is a mistake for the ECB to try to keep up. It's better for there to allow a little bit more inflation, and to protect the economy.
Do you think stagflation, I mean, this is like, it haunts nightmare for central banks. Do you think stagflation will take hold in Europe?
I worry about that, but I don't worry about it in the long run. We're still going through, you might say, a trauma. We're recovering from two major results, the pandemic and the supply side shortages that gave rise to, and the war in Ukraine. Europe has adapted well to both of those. The trauma is not over. I think there were some major mistakes Europe made, especially in the energy market, in responding, that have made stagflation much greater a risk than in other places.
Professor, if you look at the Bank of England, does the UK have it hardest than all?
Yes, they do, because on top of all the other trauma, they have a self-inflicted trauma of Brexit. And, it's just fully coming into force, and we're beginning to see the problems, but they come on top of the other two problems, which were clearly not anticipated when they voted for the separation.
So what does it mean for the Bank of England?
As you say, they have a real quandary. My own view is that growth at this juncture is more important than inflation, that it's a relatively small open economy. When inflation is tamed in the United States and tamed in EU, that will spill over and help bring down inflation in the UK.
Professor, thank you so much, as always, for joining us. That was the Nobel Prize winning economist Joseph Stiglitz talking for us about China, the US, Europe, and the UK. We'll have plenty more from Chernobyl here at the Ambrosetti Forum throughout the morning. This is Bloomberg. Welcome back to The Pulse, the conversations that matter, the insights you need. I'm Francine Lacqua, and this time we're here on the shores of Lake Como in Chernobyl, Italy. Now, there's one man that I always enjoy catching up with here in Chernobyl. It's a biannual event, and he always doesn't really give me hope. He kind of says the things as they are, and sometimes they pan out, especially after the post-traumatic events of COVID and that interest rate rise. He is Nouriel Roubini, and he joins me once again. Nouriel, thank you so much for joining us. I mean, it's always fun catching up, although you're never that positive about the world economy. Are you more positive now than you were 6 months ago, or less?
Well, I would say that compared to 6 months ago, where there was a serious risk of a real hard landing for the global economy, those risks are reduced right now.
No.
That's the good news. But I think that there is still an open discussion on whether the global economy is going to achieve a soft landing as opposed to a bumpy landing, where a bumpy landing will be a short and shallow recession. That short and shallow recession has already started in the Eurozone. The UK, with very high inflation, is probably headed towards that recession as well. In China, there is a sharp slowdown of growth. It's not just cyclical, it's more structural. United States, still the jury's out on whether we'll achieve a soft landing or whether there's going to be a short and shallow recession. So it's a mixed bag.
But that depends on what? So in the US, is it Fed policy, or is it just the tight labor market that could suddenly collapse?
Well, in the US, paradoxically, so far, in spite of Fed hiking rates above 5%, the economy has grown recently above potential. Tight labor market, tight goods market. That's good news in terms of achieving a soft landing, but it's actually bad news for the Fed, because it implies that the Fed is not done yet. They may have to hike once more, maybe twice more. Eventually, the Fed funds rate might have a 6 handle rather than a 5-1. And the more that happens, the more the risk that eventually there might be at least a short and shallow recession. But the economic data recently have been reasonably strong, even if it's slowing.
But Nouriel, I don't really understand what's changed in the last 6 months. So there could be a delayed effect of all the interest rate rises with defaults in companies, and the data from China could point to a much worse economic picture. So why are you now more positive than 6 months ago?
Well, there has been a bit of unwinding of the negative supply shocks that occurred during COVID. Yeah. Commodity prices fell. Some of the supply bottleneck have been reduced and so on. That was positive. Fiscal policy has been reasonably expansionary in the United States, but also in the parts of the world, keeping demand stronger while the Fed and other central banks were tightening. Some of the geopolitical tensions are being somehow reduced.
How odd is that? The fact that a lot of these adjustments have happened by themselves.
Well, we knew there would be some unwinding of the COVID shocks that implied initially lower growth and higher inflation, now lower inflation and higher economic growth. But certainly it's been surprising that given the amount of monetary tightening, some economies have been resilient. But the most resilient economies in the United States, as I pointed out, the Eurozone is going towards a short and shallow recession. UK, China is a structural problem. So you cannot generalize what's happening right now in the global economy. The US is probably the brightest spot as of now.
Is there anything in Europe that policymakers can do to avoid stagflation or at least make it shorter?
Well, the reasons why we have stagflations are more structural rather than being cyclical or anything to do with monetary or fiscal policy. There is process of deglobalization, there is decoupling, de-risking, geopolitical depression, restriction to essentially migration, there is reshoring and friendshoring of manufacturing, there is global climate change. Those are all structural factors that over medium term reduce growth and increase cost of production. And the structural reforms that increase actually potential growth are occurring too slowly. Technology in the future is going to be a force for stronger growth and lower inflation, AI, machine learning, robotic, automation, quantum, biotech, and you name it. But the effects of that on growth and inflation is going to take time. In the short run, the stagflation forces are more important in some parts of the world.
What do you make of China right now, and what are markets most misunderstanding about the world economy and actually how equities and bonds should behave?
Well, China, the reduction in growth is not cyclical, it's structural. It has to do with aging of population, debt and leverage, housing overhang, state capitalism, a backlash against the private sector that depresses the sentiment of household and the corporate, geopolitical depression, the policies that are effectively Marxist-Leninist of Xi Jinping and so on. So I think that potential growth used to be 10, went to 5. I think it's at best 3 to 4%, and that's not going to change because it's emphasizing security control over opening up and reform. That's the main thing. Yep. I would say on markets, in my view, if the global economy is going to weaken, if there is still a meaningful chance of at least a bumpy landing, probably markets have rallied too much today. And that's maybe going to lead to a correction in the second half of the year. If the economic data are still weak and if central banks have to hike a little bit more as a way of essentially fighting inflation, and that's going to lead to a nominal and real rates rising as well. And that means that probably bond yields may go higher rather than lower while inflation is still high and central banks are still fighting inflation.
But a correction, what, a 10% correction in equity markets, or is that too high?
Well, a 10% correction is not totally unlikely. If the economy starts to soften up globally, and if you have still inflation that is above essentially target with core being still high in US, UK, Europe, central banks hiking somehow more, I would not be surprised if in the second half of the year they get a 10% correction in global equity markets.
So what would you do if you were Bank of England governor?
Well, Bank of England is facing a dilemma. On one side, growth is lower, and is lower also because of a self-inflicted goal that was the Brexit decision by the UK to reduce potential growth and increase cost of production. So it's the most likely case of stagflation. On one side, the economy is headed towards a sharp slowdown, potential recession. On the other side, core inflation is still too high. And therefore, you face a dilemma, or a trilemma in the case of the Bank of England, because you want to have lower inflation, but that's going to cause a recession, and higher interest rates are going to imply eventually financial instability because private and public debts are high, and debt servicing ratio are going to rise as interest rates go higher. So you might have actually a perfect storm in the case of the UK.
Is there anything that actually fiscal policy or just government policy can do to try and mitigate that?
Well, fiscal policies are also in a dilemma because if you want to maintain growth, you should have expansionary fiscal policy, but now fiscal policy have cross purposes with monetary policy. If you have too much essential inflation, it's because there was too much demand. That implies that cyclically, structurally, fiscal policy should be retrenching. The opposite is happening, and that's make the goal of central banks of achieving price stability harder rather than easier.
Okay, but so what does the UK economy look like in 2-3 years? How do they build the economy also to make up maybe some of that lost output?
Well, the reality is that you'll have to effectively reverse de facto, if not de jure, Brexit, maybe have a custom unions.
That won't happen? Do you see that happening?
Well, you know, people talk about Brino, Brexit in name only. If Labour were to come to power, probably they're not going to reverse formally Brexit, but probably the relation with Europe is going to improve. Maybe there is a chance of eventually going to a custom union of that sort. And UK has to do, like everybody else, structural reforms to increase potential growth. I must say that actually in some of the technologies of the future, like AI, biotech, the UK has actually lots of great academic research, venture capital, firms, startups, and that's where actually the UK should emphasize. Its strength is going to be to have the kind of reform that lead to technology and innovation, and if they do it done right, they can do it.
Bank of Japan, how much of a nightmare is it trying to go against everyone else? Will they just have to, you know, give up on yield curve control soon?
Well, they will give up on yield control, but they're still waiting to see whether this increase in inflation and core is persistent or not. I think they will gradually phase out the YCC for the 10-year JGBs and then go to the 5-year over the next 6 months. So, yeah, they're still behind the curve, but inflation is still moderate in Japan. I don't worry them being behind the curve, and they're worried about making a mistake of phasing it out too soon, and then maybe if inflation is too low, then they have to reverse themselves. So I think they're going to get it mostly right.
Nouriel, as always, thank you so much for joining us. Nouriel Roubini, their chief executive of Roubini Macro Associates. We're also on a panel together, so Nouriel has to get off and go on stage, and I'll join him very shortly. Later today, we'll be discussing Italy's surprise windfall tax on banks with the Intesa Sanpaolo chairman. He's Gianmaria Grospietro. That exclusive interview coming up. That's at 12:45 p.m. UK time, and this is Bloomberg.
The markets are, in my view, overly concerned about Italian banks. This has happened several times in the last few years. Nevertheless, it is a serious problem. I think some intervention on bad loans is necessary, but above all, it's necessary not to mess up things in the financial markets.
Well, that was the former Italian Prime Minister and Senator for Life, Mario Monti, speaking to me here earlier about the surprise windfall tax on Italian banks. We'll have plenty more, of course, from Cernobbio at the Ambrosetti conference. I'm also looking forward to speaking to the chair of Intesa. They were one of the biggest banks that were affected by this windfall tax, and I think it's one of the first times that he speaks to the press. That's a little bit later on today. Now, stocks are edging higher overall. Again, it's U.S. jobs data day, so we were lucky to speak to Professor Stiglitz about it. We were lucky to speak to also Mohamed El-Arian. Markets settling into a bit of a holding pattern ahead of this U.S. jobs data. European stocks, but also futures in the U.S. edging a little bit higher. Treasury yields pretty much flat. Now, look, the payroll reports may provide really further evidence of a slight cooling in the still tight U.S. labor market. And of course, this has implications for the Fed. Coming up later this morning, Bloomberg has an exclusive interview with the U.S. ambassador to the EU, Mark Giltenstein. That's at 10:40 a.m. UK time. Then later today, we speak also Italian banks and that windfall tax with Intesa chair Gianmaria Grospietro. This is Bloomberg.